third video in my series of videos that I'm doing on gold. In the first video, I had to understand the basics of gold, demand and supply, what are the structural changes that may be happening in gold. In the second video, we addressed whether it makes sense for you to have gold as a part of your asset allocation. And in this video, I'm going to address a question that I am asked very, very frequently nowadays. Does it make sense to invest in gold at these levels? It's already run up. So I'm going to try and make you answer that question by making you understand the psychology of gold. So let's understand, when is it that gold rallies? Gold in the first half of 2020 has beaten almost every asset class. It's given a return in excess of, I think, about 30%. So when does gold rally? When there is fear psychosis in the market. Every time people are scared, they run to gold as an investment, and even in India, they tend to buy jewelry, right? Now, you might want to notice a couple of points here that from December 2007 and right up to February of 2009, when your Sensex crashed by 56%, the gold actually gave you an absolute return of 48%. Next, I'm also going to pull up a chart here that I've done in my earlier video, where it is pertinent for me to show it to you again for you to understand what I'm saying. So look at this chart. Now, we've taken all major events where the Sensex has crashed. We've taken the Black Monday, the dot-com bubble bust, the global financial crisis, Brexit to some extent. So you see that every time the Sensex crashes, gold rallies. Now, ignore the green bars. That's volatility index and something that you don't need to get into. The dirty brown color is gold, and those bars that are falling are your Sensex. Okay, so then also yet another point which goes on to prove what I'm trying to say here. You see, from December 2017 onwards, gold had started going up. I would think it was on account of the geopolitical uncertainty that was building around US and China and the consequent trade wars. Okay. Now, question to you. Is the uncertainty from COVID going to abate? Chances are yes. Is the geopolitical uncertainty on account of China and US going to continue? I would say yes again. Whether it be Biden or be it Trump, this so-called war is going to continue between US and China for a couple of years, at least more. The only difference between Biden and Trump would probably be that, Trump's policies come out like Jack in the Box and you're like, what happened there? And Biden is a little more predictable. So that's point number one. Now, what is the second atmosphere in which gold rallies? Gold rallies when there is easy liquidity. Easy liquidity meaning when there is easy money in the system, right? Now, why? Because if you and I have money, we go and tend to invest more. We invest in gold because it's an asset class which deserves an investment, I guess. In India, of course, people go and buy more jewelry the moment they get more money. So that's another time when gold rallies. Now, look at the aftermath of the global financial crisis. What happened? There was a crisis. All your central bankers poured in money like how? And then what happened? From 2008, when gold was about $900 an ounce, it rallied all the way up and gave a return of about 100% in 2011, right? Now, gold in this financial crisis, in this financial and medical crisis, has rallied by about 30%. And this is no less of a crisis than the global financial crisis. I would place it at equal magnitude, if not more. The only difference between the global financial crisis and this one is, I think this got an earlier response from central bankers, so they poured in money faster. So, question again for you. Do you think there is space left in gold to rally from these levels? Okay, so now let me get down to what my view is. Okay, another cost of blowing my own trumpet. The fact is that we did pick up gold starting from 2017. So for me to pick it up at these levels is a little bit of a psychological barrier. And I'm already invested in gold as much as I want to be. But will I take it out at this point in time? No, I won't. I'm going to stay invested. For those of you who haven't gotten into gold yet, I can tell you this, that your risk to reward is high now. I can also tell you that in the short term, I would be a little negative on gold because I've seen a lot of froth building around it. In the slightly medium term, my bet would be to be positive on gold. I am going to say something here, and it's not a disclaimer, but it is something that you need to understand so that you don't make a mistake. My view or our view can change from one day to the other depending on if there are new data points, if there are new events that happen in the market, right? And also, the fact of the matter is, by the time I make this video and it gets to you, it's almost a 2 week lag or a 10-day lag, right? Which is where I'm trying to build you to a position to understand why we arrive at a certain conclusion. And then I urge you to speak to your financial advisor. When you're finally making that decision of which asset class to get into or which area within that asset class to get into, you must speak to your financial advisor. My promise to you here is that nobody can take you for a ride because you'll know the basics, you'll know how it moves. But the final decision, take it with your financial advisor for the reasons that I mentioned earlier. Okay, so with that, I hope I've been able to value add. And I'm going to catch you in the next video where I'm going to tell you about sovereign gold bonds, which are going to hit the market in a couple of days. Bye. Have a nice evening.